Yeah, I'll record it.
I want to at
Mhm.
least try posting the recordings in Discord. I think that could work pretty well. I set
Yeah,
up
I
a
can start
channel
doing
so we
that.
could just, you know, put every recording in order on there so people can look at them if they want.
I like that idea.
All right. So I'm Connor Doherty. I'm a freshman at Cal Poly, civil engineering class of 2024. I might be switching majors, but currently it's civil engineering. We'll see how that works. So for the past probably, move that cable. For probably the past about 2-3 months, I've been pretty much religiously investing in equity crowdfunding. I probably have more investments in equity crowdfunding than the public stock market at this point. Um, I think that's something probably not a lot of other people have going on right now. But I found it pretty amazing investments, and I think I've already made a good amount of money. So yeah, and I even started a blog over at acidoverload.com. If you guys have any questions or anything, like literally just hop right in and interrupt me. So just a quick overview, equity crowdfunding. If you've heard of Kickstarter or Indiegogo, pretty much, companies, they sell their pre-order products on there. You order them. Some of you probably actually order products on there. And essentially, if they make the product, you get the product. If they don't, you lose all your money. And equity crowdfunding is similar in that way, except you're actually getting equity in the company, so it's an investment. Similar to the public stock markets, but definitely not the same. The keys aren't working. Okay, there we go. So for probably almost the past century, if you wanted to invest in private companies, since the 1933 and 1934 acts, you either had to be with a venture capital firm like this one, or you had to be accredited, which meant you had $1 million or more net worth, or make, I believe, $300,000 a year if you're married, or $200,000 a year if you're single. And I don't think any of you guys are accredited here. I have no idea, right? Some of you could be millionaires, but I don't know. So for the sake of presentation, we'll assume you aren't. But for probably the past century, you haven't been able to invest in private companies. It's been illegal because they want to protect you or something. Essentially, when consumers spend a bunch of money on products on Amazon and stuff, we don't care. But when they want to blow it all on risky investments, we absolutely freak out. So to kind of understand what it was like before all these regulations and before this, you kind of have to go back to before there were any regulations. And with JP Morgan here, he spent $400 million on Andrew Carnegie's steel company. And he actually did that with money that was deposited into his bank. So that's something today that is very, very illegal. But back then, he kind of just took all the deposits, and then he created the largest company in the world. And I believe there was antitrust at some point after that, but at the time, it didn't really matter. Nobody really cared because there were very few regulations, and it was all pretty chill. And then because there were no regulations, Great Depression happened. Now, some economists, and actually we learned this in macroeconomics, the Fed chair actually in 2002 said, "We did it. We're very sorry. We won't do it again," which I thought was kind of crazy to hear from the Federal Reserve. But essentially, they caused it. Regardless of who caused it or who was the reason that the Great Depression happened, the Securities and Exchange Commission was formed in 1933, 1934-ish. And then they passed all these acts to regulate the general public stock market and, private companies to make sure that people couldn't invest in private companies. And there were all of a sudden all these restrictions that today actually still apply. If you see regulatory filings and stuff, they'll actually mention the 1933 and 1934 acts, which is pretty crazy that for almost 100 years, these laws still govern us. So in 2012, financial crisis hit, and obviously that was pretty hard for the banks, for investors, for Americans who lost their jobs, and startups really couldn't raise any money. Kickstarter and Indiegogo were actually founded during the financial crisis. And a lot of other companies came out of the financial crisis. Some big names you'll hear, I think Airbnb did. A couple other of those big tech companies came out of the financial crisis. And because startups couldn't get capital, Obama and Congress passed the Jobs Act, the Jumpstart Our Business Startups Act. And that was in 2012. And he said, so if these entrepreneurs are willing to keep giving it their all, the least Washington can do is help them succeed. And what the Jobs Act did was it essentially meant that startups who wanted to raise money rather than going to venture capital firms, because there's over 400,000 startups a year. The SBA says, I think it's maybe over 600,000 a year now. It kind of depends on who you ask. And there's only about 3,000 venture capital deals per year, right? So there's, 400,000 to 600,000 deals every year that don't get made. And obviously not all those startups need money, but some of them do. And so they don't really have access to that capital that they need to grow. And that's kind of what the Jobs Act did. It loosened the regulations, and over time, people, everyday Americans like us, or anybody else, actually accredited investors, could invest in these private companies. They could raise way more money, and I'll kind of show you how much they are raising. But this was a bipartisan bill, something we really never see today. I believe the vote in the House was 390 to 23, and the vote in the Senate was 73 to 26. So it was probably one of the least partisan bills in history, quite literally because they called it the Jobs Act to make sure that nobody would vote against it, which definitely worked. So I made this graphic for my blog post I made on the Jobs Act, but essentially it actually took about 6 years or 4 years, to really come to fruition. So the start in 2012, the rules were just kind of loosened. There were a couple changes to the Securities and Exchange Acts from the 30s, but it wasn't a very big deal. And then in 2013, Regulation D came into effect. So over time, the SEC was actually enacting these because they didn't want to just jump right in and cause a recession or do something stupid and lose a bunch of people's money. So they slowly worked with the SEC to create all these laws. But Regulation D meant that accredited investors could invest unlimited amounts. They already could, but this meant that essentially, as an accredited investor, the companies could reach out to you and they can market to you, which was something that hadn't happened in, I guess a century. And then in 2016, this is probably the most important one on here, Regulation Crowdfunding came into effect. It allowed non-accredited investors, so people like us, to invest in equity crowdfunding. And it allows them to raise it was $1 million when it was enacted. Then a couple years ago, it was $1.07 million because of inflation. And then just about a little over a week ago on Monday, the SEC actually just met to change this to about 5 million. So it's going to be a pretty big raise coming up that companies can do. And there's a lot of people thinking that a lot more startups will be raising money via regulation crowdfunding. And then there's also Regulation A and A+. I believe Regulation A has been around for a long time, but typically it's only been accredited investors. Now non-accredited investors can invest. It allows companies to raise $20 to $50 million. So there's definitely some very big companies in there. I know personally I've invested in Start Engine, their equity crowdfunding site, and they're about $220 million valuation right now. So there's definitely some pretty large companies in there, also some pretty small ones. But typically Regulation A and A+ are much larger companies that are going to go public soon. And then in 2020, coronavirus arrives. And then today, there's $410 million raised just via regulation crowdfunding, and that's over the past 4 years. But 79 million of that was just in the third quarter. So I think you can kind of see how much it's grown. I believe Start Engine, the biggest site, has grown their revenues 400%. So the growth we're seeing is absolutely astronomical. And obviously COVID-19 comes into a play. Mr. Wonderful right here, Kevin O'Leary, is Start Engine's strategic advisor. Basically, they pay him $400,000 a year to hang out, look good, and put their face all over all their graphics and images. So it's a pretty sweet deal for them. And he actually I believe he has a certain amount of stake in the company. And he said it's probably the most viable opportunity for entrepreneurs and companies to raise money. Because with the coronavirus, and there's no banks loaning money, there's no investors loaning money, because everybody is kind of scared and the market's uncertain. So it's become pretty good. Obviously, it's growing astronomically now. But what about investors, right? This is Investing Club. That's about the entrepreneurs. That's an entrepreneurship club, right? Now, these are annualized investment returns. I got this from Cambridge Associates. I made it into a graph for the blog post. And essentially, late-stage venture capital, multi-stage venture capital, you can see they kind of took an index of all the venture capital returns over time. And realistically, the early-stage venture capital, about 25%. If any of you know like compounding interest and how that works, 25% is like an insane return. And if you can get that every year, you're going to be doing very well. Same with even all of those other ones. Realistically, they're all beating the standard stock market, but this was over a 30-year period, no inflation. So it's going to be slightly less than that. And obviously, you got to think long-term because these are risky, illiquid investments. So the types and limits. For accredited investors, you can pretty much do whatever you want. If you have enough money, they really could care less, which beats me. But essentially, if you have money, they assume that you know what you're doing. And with regulation crowdfunding, your limit is $2,200 a year. That's across all companies, 1 full year. And they actually are required to disclose a Form C to you, which has, financial statements, all kinds of like who owns stock in the company, what loans they have, how much cash they have, all their balance sheets, all their income. They pretty much have to disclose everything to you, but they don't have to do as much with the SEC. And that's kind of what a Regulation A offering is for, an A+. They have to disclose a Form 1A. It's slightly more than that. They have to have like audited financials and do a few more things. So it's much larger companies and companies that are looking to, be pre-IPO or go IPO on the public stock markets. But every investment you make, it can be 10% of your net worth or your income. So whichever one's greater, take 10% of that, and that's your maximum investment in Regulation A or A+ companies. So essentially, as long as your net worth is somewhat high, which you can literally, go on something like personalcapital.com, you can find your net worth or your income, and you should probably know that too. Take 10% of that, and that's your maximum amount you can invest in companies. But that's per investment. So you can pretty much make unlimited investments as long as your net worth stays at a certain level. All right. Is there liquidity? This was actually me on the left there. I was in a meeting with Kevin O'Leary because he's a strategic advisor. We, on last Friday, opened the secondary exchange for Start Engine. This was one of the first secondary exchanges for equity crowdfunding shares. And currently only their shares trade on them. The shares of their own company trade on their own exchange just to kind of test it out and make sure everything works. But, with Regulation A and A+ crowdfunding, you can sell your shares immediately. The second you get those shares, you can sell them. Now, with Regulation crowdfunding, you have to wait a year unless you sell it to an accredited investor or you are one. You pretty much have to wait a year. But with Regulation A and A+, you can sell them right away. So now they're kind of developing their own secondary exchanges and their own stock markets to kind of not necessarily compete with the public stock markets, but to make sure that investors have liquidity. And Kevin O'Leary in this meeting, actually, when we rang the opening bell, it wasn't really ringing, but he said he was actually jealous of some of the investors because he does never get liquidity. And so he's really excited for what the future holds for equity crowdfunding. Now, what can you invest in? These are some of my investments right here. Top left, you'll see me with some of the regrained protein puffs. Regrained takes like upcycled grain from, they take spent hops from beer and they turn it into grain. They make flour out of it. They make, puffs, they make bars. Those were actually really good. They're about a $10 million company. Fuel Gems in the top. They make fuel additives, and they're actually working with BP and a couple other companies to market their fuel additives and a bunch of trucking companies because it saves fuel, it saves carbon from being emitted, and a bunch of other crazy stuff. And that's only like a $2-3 million company. They make any of those deals, I'm going to make a lot of money. Smart Tire Recycling in the middle there. They recycle tires. It's exactly what it sounds like. It's very small. I believe it was like $2 million company when I originally invested. Solectrac in the top right. They make electric tractors. And then Gray's Mowing in the bottom left. They actually do electric, autonomous, commercial lawnmowers. They have their own like proprietary AI system to detect obstacles and move the mower around them. So there's been, you can pretty much invest in whatever you want, whatever you're interested, you can invest in. If you like food, you can invest in food. If you like fashion, you can invest in fashion. You like finance, you can invest in finance. It's kind of up to you, which is one of the best things about equity crowdfunding. And you can actually talk to the founders and talk to the CEOs, something really public stock market you can't do. I've talked to a lot of them. They have a comment section. You can chat with them all you want. You can email them and they'll actually get right back to you because they're pretty small companies, which is definitely a very interesting thing. So to kind of look at what kind of value some of these companies can bring, I've kind of just put together a valuation and kind of a bullet point list for Solectrac. Essentially, it's a $7.75 million valuation. That's pre-money. And some of you might actually know IDEX on the public stock market. They have a $1.3 million investment in them. They own 15% of the company. So that's pretty cool. They just did that like a week ago. And they have 257K in revenues in quarter 3. They're doing pretty darn well. They're just learning how to manufacture these tractors because Steve, the CEO, has been doing it for, the past 50 years or so. He was a part of the first Earth Day and has been building electric tractors and electric landmine. He built tractors to run over landmines in Japan and a bunch of other crazy stuff. And for the past, 50 years, he's been working towards building these tractors, but they're just learning how to make the batteries and how to do all this other stuff. And it's definitely a pretty big industry they're creating for themselves. So where can you invest? If let's say you want to invest in Solartrack, you want to invest in one of these other companies, how do you do that? It's actually pretty easy. It's relatively similar to Kickstarter and Indiegogo, but you kind of have to look at some of the regulations and make sure you're not investing too much. And usually they'll tell you like, hey, make sure you make this amount of money to invest in this company or to make this big of an investment, or are you sure you can do that? So they ask you a few questions, a few regulatory questions, but other than that, it's pretty simple. You can go on their pages. I believe I actually have under the Equity Crowdfunding section in the Discord, there's a bunch of links for all these companies. If you want to check any of them out, Start Engine's link or Solartrack's link is in there. If you want to take a look at what it looks like to have a campaign, it's very similar to regular crowdfunding. And my favorite, Start Engine, obviously I'm invested in them, so it's kind of like already my favorite regardless. But they have the most Regulation A and Regulation A plus offerings, which, as we talked about earlier, are almost unlimited. Depending on your net worth or your income, you can invest as much as you want, per investment or just overall, but per investment, you have a limit. And WeFunder is probably the second best. I kind of ordered this list from my favorites. And WeFunder pretty much only has a regulation crowdfunding, so your $2,200 limit is going to really apply on sites like that. Obviously, it's across all sites, so you still have to keep that in mind if you're investing in multiple sites. But they have probably some of the biggest amount of companies, like the most companies, and a lot of them are really small, like $2-3 million. Seedinvest.com, they have their own like auto investing kind of. It's not an index fund, but they automatically invest in companies that they have on their site. They vet all their companies, so it's a bit different, and the minimum is like $1,000, so it's pretty high. I have invested in Seed Invest in companies on there, but the auto invest I decided not to do because I didn't want to invest in some of the other companies. Even if they are vetted, I was like, I don't really want to put my money in some of those other companies. Microventures.com, I've invested in one company on there, a wave energy company, and they only have like 10 to 15 companies on there at a time, but it's always good to take a look because sometimes there's some cool companies on there. Republic, I haven't actually invested in Republic at all, but they have some companies on there too that are pretty interesting. I haven't found them to be anywhere near as good as any of the other ones, but that's about it. What next? There we go. For more info, obviously most of these sites like Start Engine, I know has like a whole blog and they have all kinds of info on there. I know I'll be coming out with a guide at some point on my website, and I think that's about it. You guys have any questions?
So how did you get started? Like what inspired you to get into crowdfunding and like why do you prefer it versus the stock market?
I think for me, I prefer it over the stock market because there's no volatility. The shares are the same regardless every day. I can't check them every day. I
wouldn't say there's no volatility, but
well, yeah, there's a lot of volatility,
check.
right? You
Yeah,
could lose
yeah.
all your money. There's risks, right? But
Yeah.
essentially, I don't notice the volatility, right? Unless the company goes bankrupt, I'm like, okay, like I'm invested in this company. I think for me originally, I think I might have seen an ad. I don't remember. I know with stocks, I used to watch a YouTube video on AMD stock and why some tech YouTuber needed to buy AMD stock. But for equity crowdfunding, I believe I just saw an ad or I saw something one day and then I just dove down the rabbit hole for the next few months. Does that answer your question?
Yeah. No, that's...
Yeah, no, I think they're smaller companies, so there's a lot more opportunity for growth, which for me is, especially getting to invest similar to, guys on like Shark Tank or, some of these companies are like $2 million. And so the growth opportunity is just absolutely, monstrous compared to the stock market. And I think that's the big thing for me. Obviously, you also get to talk to the founders. They're pretty small companies. You can reach out to them pretty much at any moment if you have a question, which is almost like having, like if you have your own, not really if you have your own broker on an exchange, but if you have any questions, it's almost like they're just ready to answer them 24/7. And even all the exchanges will answer your questions too, if you have them.
Yeah.
Because they have
And
pretty big teams.
So to make sure I'm clear, like if you right now wanted to sell the shares that you have in these companies, could you do that today?
No. So only in Start Engine right now. There's a couple. I believe there's one other company. Yeah. So like each company, each exchange has to have their own like secondary exchange because they have to be registered, just like all the other big brokerages like Fidelity and stuff. They essentially have to have their own brokerage and be a broker dealer to invest or to be allowed to sell these companies on their own exchanges or whatever, because they're basically creating their own stock market. And so there's like, I think it's taken Start Engine 2 or 3 years to get there. So currently it's only their shares. So that's all I would be able to sell right now. And then as long as you wait a year, some of them, you could technically sell them to anybody. I don't exactly know how that would work. At least with regulation crowdfunding, you can sell them in a year. I'm assuming you could sell them to somebody I have no idea. And then with regulation A and A plus, you can sell them immediately. I guess you could sell them to somebody I have no idea how that works.
Yeah, I guess I'm just like curious about the exit. Like what for?
It's mostly buyouts. And then some of the regulation A and A plus, some of them are definitely going public. I think Start Engine's going public. They might actually not be going public because they raised so much money on their own platform. So it's kind of a weird situation for them. But some of the other companies I've invested in, I know they're going public. I think TerraCycle is going public. They recycle just about anything environmentally. I think they even recycle cigarette butts.
Is it up to the discretion of the companies then? Like when your shares are going to be sold?
That's essentially, it's up to them whether they get bought out, whether they IPO, whether they kind of do whatever they want. I think some of them actually give distributions too. Some of them have their own like dividends even, or they have their own like way of distributing some of their revenue. There's even revenue sharing models where you can invest in a company and then you get a portion of their revenue. So there's some really interesting ways that companies are getting investments now too.
Have any of you you can go, Mason.
Okay, sorry. The exit that you're expecting is like either a company gets acquired or they IPO.
Yep, correct.
And you will receive X amount of dollars per share based on that agreement.
Yep, exactly.
Okay, that's cool. Yeah, this seems super exciting. I think like what I think about is just the
being able to
sell them. The chance that one of these companies fails is is very much non-zero.
Oh yeah, no, it's definitely. I'm sure one of these companies I talked about today will not exist in 5 years, and I'm fully prepared to take that risk. But you kind of have to be ready to stomach that if you are investing in these companies. Or obviously you have to be proud of your research or whatever you saw in the company.
For your personal investments, in terms of equity crowdfunding, what's the checklist that you go through in terms of, determining what investments you want to make? Because
I think the biggest thing for me, obviously you kind of got to watch their videos and figure out like whether you even like the idea, right? Because if you're not excited about the company, you're going to be like, oh, I need to sell this. Or, in 5 years, you're going to be like, why did I do that? And I've had that happen with one company. I forgot to cancel it. And then I was like, well, shoot, I didn't want to invest in this company. I just forgot to cancel it. And that was with the start of it. But I think if you look at they have all kinds of info on there, just like a normal crowdfunding campaign. But I think the most important part is looking at their Form C for regulation crowdfunding. And then for regulation A, it's 1A or whatever. Usually it's really prominently displayed on their page. And that has all their financials, who owns the company. But I think it's very clear when some of these startups raise money. I've kind of seen this as a pattern where some of them are quite literally going bankrupt. And in order to not go bankrupt, they're raising money. You know, they have like $2-3 million in debt, and the company's valued at like 10 million, and they're, you know, losing millions every year. And it's like they can only stay afloat if they keep raising money every year. And so it's kind of looking at whether they're raising money to grow faster or raising money because otherwise they would literally be gone the next day.
Right.
Because some of them, it definitely is like, you know, some of those companies have millions in debt and it's just a disaster. So that's probably what the biggest thing I look for is like, is the company going to go under? Because that's obviously your number one risk. How much debt they have, how well they're doing, and then their CEO is probably right after that, you know, just like a public company. But it's even more important because these companies are very, very small. LinkedIn's awesome for that. I love using LinkedIn. Essentially, you can just see everything they've ever done. Some of them, they're big enough too where they have articles written about them, but that's kind of where I would go. Yeah.
And I know well, go ahead.
I was going to say, what sort of volumes traded on, what was it, Start Engine?
Yeah.
You know?
Here, these are all the references. I can stop sharing and I'll take a look at it right now. It's not very big right now. I believe the first day it was like $10,000 or $20,000 or something. It was very small. But every day it seems to be getting larger. Like there's some larger investors coming in. Let me check. I don't think they say on there, but I will look. So there's about 1,400 shares at $12 currently on the market. There are no market orders right now because it's still really new.
Mm-hmm.
So whatever that is.
Don't you feel there's a huge like opportunity cost of capital?
18,000. Yeah, no, there definitely is, right? Obviously you could be putting all that money into public companies.
Right, because I know you're more focused on like growth, but there's tons of like if you want growth, you can with much more liquidity.
Yeah, no, and there's definitely
you can look into like
public stock market
FFTY.
companies. I feel like today there aren't very many valuation based companies out there now. It's all growth. And I think with regulation crowdfunding and equity crowdfunding, you can kind of get that value, but also growth at the same time. Don't you think that's just because we're in like very low interest rate environment? So like a lot of the companies that are doing the best are super high growth companies. Yeah, I mean, obviously, you know, we got lower interest rates, everything's growing, but
right. It's an interesting idea though. Like I definitely see why.
Yeah, no, like I think for me, value companies, they don't grow in the stock market, and growth companies, some of them are way overvalued or they're not doing so well or they're losing way too much money. But on here, you can have value companies that are also growing and making money, which I think for me has been pretty great, at least in my eyes.
Yeah, I was just going to ask, I think you talked about it a little bit, but I might have missed it. How reliable are those Form Cs?
You know, they're probably similar to they're relatively similar to the actual page that they're on. They're not all that in depth, but they have, you know, all the financial info you need. Most of them, even though regulation crowdfunding doesn't require that they have, you know, audited financials, they'll include audited financials, which is really nice to see sometimes. Yeah. And sometimes they won't list it and you have to go through like a paragraph and try and figure out how much money they have. That's about where it gets bad. And it's like, it comes hard to find. And sometimes they'll submit a Form C, but they won't include a PDF. So you have to go through the SEC's like Edgar search website, and you have to look down this like ancient list from like 20 years ago for, you know, how much assets they have and stuff. And it's like, but usually now they've been really good about including PDFs in the website or in the link that they're using. But that's probably the biggest thing is like, if they don't include a PDF, you're kind of screwed. You can still find the numbers, but they don't have commas and they're just a jumble of numbers all over the SEC's website. But it does go pretty in depth, you know, it has I don't know if they have a necessarily official cap table because I haven't seen all too many of them, but they pretty much tell you who owns what in the company. I think some of them, you know, the CEOs own all of it. Some of them, they have a couple of them, they have a bunch of family members owning stuff. So that's definitely something to look at too. Their whole family owns the company, but yeah. And then I'm sure some of them have like some crazy debt obligations too. That's one of the biggest things in there. Some of them have loans from like, a couple of them have loans from their CEO, right? So that's not that big of a deal. It is kind of weird, kind of odd. And then some of them, I believe, I forget which one it was, but they essentially have loans to like family and friends that they still owe. They have like debt to them, which can definitely be kind of weird if you see that and you're like, well, why didn't I get a loan from a bank, right? And it's at like 15%. So there's definitely some crazy.
When these companies are starting out, like most funding comes from family and friends.
Yeah, no, I understand that.
Angels and stuff.
But some of them, it's like, oh, this family member loaned me, $500K at 20%. And it's like, wait, what? They loaned you, and now they're a $20, $30 million company and they're not getting a loan to cover that or something at, 10% or 5 or whatever they can get.
Right. Yeah.
It just kind of shows you sometimes like, okay, are they going to be paying this interest off forever or not? Because 20% of, $1 million is $200K a year just in debt payments.
Yeah.
Even.
I guess if you think they can raise like a huge round, they can just like.
No, for sure.
Totally.
And some of them are similar to Uber in that they're just raising money like every year. And that's the reason they're still staying afloat.
Yeah. I mean, I think most companies, like when they're really starting out, if they're trying to be high growth, like.
Yeah, no, for sure.
As much as you can. Yeah.
And some of them are definitely just losing more and more money as it goes on too. And, you see that in the public stock market too.
Cool. Does anybody have any more questions for Connor?
Yeah, and then all the resources, pretty much all the links are in the Equity Crowdfunding tab. I think I'm going to add a couple more. There's a couple more websites, but that's probably about it.
Sweet. Well, thank you so much for presenting, and I recorded it, so I'll definitely be putting on the Discord server along with a couple other meetings that I've recorded in the past. I haven't recorded all of them, but I do have a couple that I will throw in the Discord chat. I think that's pretty much it. I just wanted to talk quickly about basically this rally due to this vaccine real quick. I said we are going to talk about the election results, but I figured this would be a little bit more interesting just because we had kind of based our conversations around the election the past couple of weeks. But I just wanted to hear what you guys' thoughts for that. And, with this Pfizer vaccine, do you think like it's going to be like a slow, steady progression up through, until we're back to normal? Or what are your guys' predictions on, what do you think will go down? Just a couple
I was listening to the conference call that they had before, and it was around this time that they said like first or second week of November, they're going to release the trial results. Okay. And then they said that they didn't really expect to release it until March in the conference call. It might have changed since then. That was like late October. And also I was reading up on it. They're already backtracking it since they know like all the commotion they've caused. They're saying that you need to store the vaccine at -70°C for like at least a day, before you actually get the vaccine. So I think it's still super early, but the actual results are pretty great for humanity.
No, for sure.
I was in a meeting with a teacher because I guess I didn't really understand what the numbers meant. But it was like a double-blind study. So like, it's not that, basically I think what he said was like, there were 3 groups, people who were given high dose, a low dose, and like a control group. And then they, after a certain amount of time, like, I don't know exactly how long it was, but, there were like 94 positive trials out of like 44,000 people or whatever it was. So it was like basically the percentage of total cases was like a lot lower than they would expect it to be had there been no alteration or like no treatment, which means it was effective, but it wasn't like a clear. I think the power of the test is not super high compared to, I mean, obviously you can't do that for ethics reasons, but it was an interesting discussion. Like, it doesn't necessarily mean that it's the like perfect solution.
I think as well. I think the 94 positive tests came from the placebo group. Um, I think I heard that somewhere, which is also interesting. So they're waiting for more positive tests out of the placebo group before they finally release it.
I thought that they didn't know who the placebo group was. Like that was the point of the double blind.
I'm not sure.
Okay, that was my understanding, is that they don't know, like they themselves, the nurses, like no one knew exactly who was given what, to make sure that there was no like
bias or
something like that. I could be wrong. That's what my professor was saying yesterday. But
well, I think the people actually administering it probably wouldn't know whether they were giving them an actual like dose or a placebo or not. I'm not sure. I don't know. I don't know as much as I probably could about this, but yeah, either both make sense.
yeah, no, it's just interesting because like everyone yesterday read like, oh, 90%. Oh fuck, hold on. Sorry about that. Everyone kind of looked in the morning and saw like a 90%, like 90% effective, and then took a second and was like, well, what does that actually mean? So that's kind of hard for me to decipher, but
yeah,
I don't know.
And I also heard that they weren't going to be able to release it until early next year. And even then, I mean, they're probably going to give a lot of it to essential workers and healthcare workers, right?
They have like a $100 million vaccine contract with the government for March delivery.
Yeah, and it's like a 2-dose. There's 2 doses, so that's like 50 million people, I think, right?
Yeah.
So is it's saying healthcare workers, the elderly, sick, and then essential workers right here.
Oh, there you go.
And that was just for the 100 million?
Oh, I'm not sure.
Okay.
I'm not sure.
But I mean, I would assume we have, I don't know. Yeah, no, I'm curious to see how they're going to roll out tests and how they're going to pick and choose and prioritize who gets it.
Either way, I think that, whether or not like this metric is like super accurate, I think that like, articles coming out like this in Wall Street Journal are going to have like a significant effect on the market no matter what, just because of the hope of people in terms of, getting back to normal.
Yeah, it's bad news. A lot of like the stay-at-home stocks are just getting destroyed though. Like Zoom was down an absurd amount. I think it's recovered a little bit, but it's definitely. I'm also curious to see how relevant a lot of the stay-at-home things like Peloton is another big one that was down a lot yesterday. Because I mean, I'm not sure they're definitely not going to go away. It's not like, oh, as soon as the pandemic's over, we're just going to stop using these things. So I'm curious to see what the longer lasting use for those stay-at-home products and services might be.
The issue with the issue with that is that a lot of the big tech companies are getting dragged down with the market because of like the whole stay-at-home thing. For some reason, like they think Microsoft's going to stop being Microsoft, but that's gonna drag the whole market down just because of their like insane market caps. Like the whole market's going to get dragged down if like the selling pressure on the big tech companies keeps going. And if we're talking about the equity rally, I think the main reason that we had like such a big bounce from the week of the election was just because of the VIX was so high, and like it was like a pressure release once the election ended, where all the put options were gone, they all expired, and the VIX was just, I mean, did you guys see it was like a 40%? It was a 40% decrease in the VIX in like a week.
I can pull it up right now.
Yeah.
It was ridiculous. And and also the market always does the opposite of what everybody thinks it's going to do. And everybody was selling into the election.
Well, I think
it bounced.
Yeah, that has to do, like what I was hearing is people were kind of predicting things would do better after the election, regardless of either way it went, but like the uncertainty gets priced in, and
Yeah.
Well, and I think now the Senate is still up in the air. I think in January, Georgia's having their re-election, their runoff. That'll be the big one right there. I'd say, again, it's almost going to be like a second election for some of the stocks probably.
That's really important. The market's pricing in a Republican win, though.
Yeah, but I wouldn't count that out. Some of those candidates are doing really well in Georgia.
No, the market's pricing in a Republican win because if the Democrats win, that's a huge thing for Democrats because they can pass the tax plans.
Yeah,
the tax plan that Biden wants, and that's really bad.
The tax plans and the clean energy bill.
That's really bad for the market. The market wants just like.
Yeah, no, you're right. It wants to say the same. That makes sense.
Yeah,
but. I think the big one that they were scared of was corporate taxes. I think Biden mentioned it in this speech, and then you could just see the dip. Like in the second he said the word, it was weird. It was funny during the debate.
I don't know how much he's going to be able to like play with the taxes though if the Senate stays Republican.
Yeah, they're not going to let him raise the corporate tax. You're right.
That was another reason for kind of the increase. It was the split. Because, I mean, everyone was expecting the Democrats to just absolutely sweep the House, right? And just didn't turn out that way.
Yeah. I mean, they're still winning by a bit, but I think, because you know what happened last time, though? It was during a midterm election that they absolutely demolished, right? I think it kind of depends on what states are in it. Like, I know Washington and Oregon weren't even in this one. I don't even think California was in this one, right? So you could look at it and be like, oh, the Republicans won all these seats back. But if in 2 years, I don't think that's going to stay the same, right? Because California, Oregon, and Washington weren't even in this one, right? And that's a lot of the House and a lot of the seats that are all pretty much going to go Democrat.
Republicans, hey, I'm Ethan, by the way. Republicans had twice as many seats to defend in the Senate than the Democrats did, and they still kept them all. So, I feel like that's a pretty hefty sign that Republicans are doing well, aside from the president. So I would expect Georgia to go double red. I think the market's priced that in as well.
I think that one guy, the offer or whatever guy,
Ossoff.
I think Ossoff could win.
I
don't
doubt
know about
it.
the other guy.
I'm from Georgia.
Okay.
And people love Purdue. He's kind of like the homeboy of all the business people.
Even with like the insider trading stuff and in the debates and everything, they don't
give a fuck.
Yeah.
Loeffler insider traded too.
Yeah.
Yeah. But we'll see. It was close. But I think Purdue is a safer. I would expect actually Warnock to win over Loeffler rather than Ossoff over Purdue.
Oh, okay.
Yeah.
I guess that one was just kind of hard because that was the split one, right? That was the one where they had like 3 candidates with like 20%.
That was a primary.
Yeah. Oh, it was? Oh, so the actual election was scheduled for January for that one?
Yeah, that one's always been January. It was
okay.
only Ossoff and Purdue. And here's the deal: is that there's a libertarian candidate who took 2%, and I think all of that 2% is just going to go right to Purdue because libertarians in Georgia are not like.
Oh, I see. It's not like most libertarians. It's completely different because it's Georgia.
Yeah,
that makes sense.
It's like in Georgia are like nuts.
Yeah, because here in Washington, there's only one way the libertarians go.
Sweet guys. Anybody have any last comments with the predictions or whatnot?
I think it will be crazy in Georgia, though, because I know both parties are just funneling all their money into there. It's like it's going to be an absolute like battle.
Yeah, I'm sure I'll see some ads when I'm home over winter break.
Oh yeah, no, totally. There's already some. What's her face? Who's the lady that organized a lot of the presidential election stuff? I forget what her name is. The big organizer, the activist in Georgia.
Stacey Abrams.
Yeah, she's doing a lot already too.
Mm-hmm.
We'll see.
Sweet. Well, thank you so much, Connor, for doing the presentation. I will have that up on the Discord. And nice conversations today, guys. We will see you next week.
Yeah.
Next Tuesday.
Yeah. If you guys have any questions, I'm on Discord all the time and other stuff.
Sweet. All right, guys. Have a good rest of your week.
Thanks, guys.
Yeah.
You too.
Thank you.